Hi friends, so let's start with today's analysis. I think another good day for Indian markets today. I think some good things happened on the screen today. We'll discuss those things in detail, but before that, as usual, we start with the global things because a lot is happening in global front which is affecting our markets a lot. So yesterday we had a good session from US markets, although the markets are very volatile. They were moving up, down, which means that there's a lot of fight going on between the bears and the bulls in US markets, and probably that is leading to that volatility. And now, the kind of one-way push which was there in US to assume that the market will only go higher from here, that philosophy will take a hit now, or it has already taken a hit now. There are many people in US who believe now that the best of the US markets, for a short-term perspective and for a near-term perspective, I think it is over, and now it's a time to concentrate on some other Asian markets, and that's the reason why India, China, and gaining momentum, and probably that will be the story for the year also. That is what many of the economists have told, and you can probably see some videos from Mr. Ruchi Sharma. Ruchi Sharma is one person who is a good economist from India, but he tracks all the world, and he at the starting of the year gives a lot of predictions, and then probably at the end of the year he sees what predictions have gone right and what have gone wrong. And I really like his analysis, the way he analyzes the overall global markets, capitalism, the economic markets of many of the countries. So he has predicted that the second half will be very good, and second half again would be led by India and China markets, and we're already seeing that into our markets now. So yesterday Trump became slightly softer, and he's now thinking of not putting the entire 25% tariffs on the auto sector, and he's also thinking not to put or eradicate the complete tariff on the oil products which is put from the Canada markets. Canada and Trump also had a bilateral talk between themselves. I don't know because nothing concrete has come out from their meeting, but I think they have spoken to each other, and uh, whether any tariff will be reduced or some middle way has been found out, it is still yet to be seen. But obviously the Indian or the American markets are extremely nervous because of the tariff war which is going on. China has openly announced that they are ready to fight with America. They will not bend down, and they will go to the whatever extent they have to go, but they will not bend down under the pressure of America on the tariffs. They've also gone to the WTO. They've complained there that the extra tariffs which have been launched by US is unethical and incorrect, and WTO should intervene. But I don't know how much importance this WTO can be given because America is coming out of these agencies fast. Though they've already pulled out of WHO, and now I think yesterday there was a statement from Elon Musk where he's telling Trump to come out of Indian Monetary Fund. IMF also he's telling that we come out of it. Even World Bank also will come out of it. The other two entities which were formed after the Great Depression, when world felt that a lot of countries, there comes a moment when they face this kind of financial troubles, and that is a time when people should help those companies to come out of those difficult times. And these funds were set up to bail out the very difficult economies of the world. So the bailout was given to India also, Pakistan a lot number of times, Sri Lanka, many of the companies these kind of bailouts were given. But now Elon Musk is saying that we come out of these entities as well. Why should we fund the world's problem? So that is what he thinks, and let's see whether it happens or not. Europe, anyways, there is some talks between Trump and Zelensky. Zelensky has written a letter to Mr. Trump that he's ready to come to the table. He's ready to sign the mineral deal without any conditions, and probably he's now looking for the support of the American president very, very earnestly. That is what he's pulled out. We don't know whether Trump will agree to that or not, or how much they will participate. But that's what it is. But none of the entities are giving up their conditions. That's the thing. On the war front, on the peace front, everybody is still rigid on their terms and conditions, and it will not be easy process for Trump to navigate, even if he wants to. Yes, he wants to pull up his collar and say that yes, I've done it, but probably it will take a lot of time. Now, coming back to the markets, so American markets closed in green today. That was good news for them. But the important part was that the dollar index is now touching 1014.1. So it is well below 105. This was the level when Trump actually declared his victory in the elections. That time, dollar index was 105. it has given all the gains. It is now trading below it, and probably in October 2024, when the dollar index was around 100 levels, we are inching towards that. We're moving towards that. That's a fantastic news for the emerging markets. It will help the FIs to enter into the emerging markets, and probably they have started entering also. The money which they are pulling out of the US markets are actually going to the Asian market, that we can assume. Also, I've already told you that the most of the fund managers are having the least possession of their magnificent seven stocks which US possesses. The fund managers are extremely light positions on them. Retail of America is holding those stocks now. As usual, what happens in India also, the smart money or the smart people comes out at the tops, and retail only is the person who gets stuck on these kind of deals of the stocks. That's what is happening in US also. So dollar index is a extremely good move, and if we were telling in last month or so that actually FIs are selling our currency because the currency is overvalued because the dollar is stronger. I think that trade has now closed entirely. The top which has been made for 110 can never be reached now in near term. Whatever Trump says, whatever tariffs come in, those levels are beyond the reach and will not go to those levels very fast until unless something very, very, very drastic happens. So it has given a room for FIs to enter the emerging markets. Our currency has is still not becoming strong. Probably we are allowing it to depreciate because the Chinese depreciating their currency to remain competitive in the export market, because China has only this option now, nothing else. But a lot of money is still going to Hong Kong market. So today also the Hang Seng or the Hong Kong market is up by 3%. China market is also up by around 1.2%, which means that a lot of money is still going into these markets. And I told yesterday also that Hong Kong markets is this is a structural story. DeepSeek is a structural story. Alibaba stocks were up by around 7 to 8% because they have given or they have come out with an AI model or AI technology in competition to DeepSeek, and people are saying and the experts are saying, I don't know, the experts are saying that it is better than DeepSeek. So China and their companies have proven the technological advancement, the technological mind, their probably inclination of becoming better than America, that is actually coming out. And America should feel fearful. America should be worried out of it because the economic shift will happen very fast from the Western world toward the Asian world now. Anyways, they're fighting within themselves. Europe is now not happy with Trump's actions. Europe is always fighting with Russia and all those things. Their relations are not good. Probably Canada and Mexico, US is trying to make another enemies, which they have been good trading partners. And the rise of China, in spite of all the restrictions, in spite of all the sanctions, in spite of all the tariffs, is actually commendable. I mean, if anybody wants to learn the way you should run the country and probably the way economics, or let's say how the company has to be run, I think it's only China. So they've done phenomenal job, and that kind of outperformance will still remain. So as an Indian investor, we should be still cautious on the outperformance of the China and the Hong Kong markets, but we should now be least worried on the US markets. US markets probably had already made their top. It happened in the first term of Trump also, where when he sat on the chair, the dollar index topped out, the US markets also topped out. Yes, there'll be earnings, so there'll be gradual increase on the US markets. I'm not saying that for 4 years, but for a short term and a near term perspective, they also topped out. And the best part is that even the public of America, they're not happy with the movements, or let's say the way Trump is reacting to the other part of the world. It will at some point of time to become India versus America, or rest of the world versus America. Anyways, our minister, minister, Mr. Piyush Goyal is still in US. They're trying to negotiate. It's not an easy thing to negotiate. But let's see how it happens and what victory we can get out of it. That is the thing we have to wait and watch. Mexico is also in talks with some other countries now for the trade partners. That will keep on happening now. As soon as America will lose their trading partners, those trading partners will look for other markets, and that's what I told, that the supply chains will shift. There'll be huge movements, and the difference of trades between the countries will increase or decrease drastically now. If probably that accelerator is still kept on by Mr. Trump, I don't know whether he'll stop it or not. But as of now, it's looking that those supply chains will get realigned. They have to be reoriented. So that will happen, and it's a slow process. But it will not, it will now not happen that because the tariff war, all the Asian markets are sinking and US is going up. That kind of trade is over. Even with the tariff announcement, the dollar index has gone down so drastically downwards, which means that the money is flowing out of US. People are selling dollars now. That means, and when these kind of trades happen, people go and do a lot of research and they see what is the near term perspective and long term perspective. Then they take these kind of trades, which means that probably the money will outflow from US and go to some countries. Where it will go, we don't know. We have to wait and see. But India and China are looking the two top hot destinations for the market, for the money to be placed. Today, again, Jeffries, Citi, Golden Sachs, uh, and Bank of America, BOFA, all have given extremely bullish targets of Nifty. The least target was around 25,000, which is 14% away. I am telling the target should be around 26,500 to 27,000 for this calendar year. It will happen. The fundamentals and everything is saying that Nifty of India should touch 27,000. We just started our journey. It's a long way to go, but our markets will outperform the US markets this year. Last year, US markets outperformed Indian markets, Chinese markets. This time, India and China will outperform US market for sure. So anybody wants to park in the money, this is the best time. You should buy Nifty ETFs or whatever stocks you want, but this is the time to actually enter into the markets. Our bottom probably 22,000 has been made, and it will be extremely difficult. Somebody has to sweat out now to give a reason to break those levels. And now with these levels of these fears of tariffs, at least those levels will not be broken. That is for sure. Tariff will not break those 22,000 levels. There have to be some other incident, some other unknown risk now which has to come and break these levels. Tariff war is now known to the world. It's a known risk, and anything which is a known risk is captured very fast in the prices. It takes really some days and hours to take into the prices of all those things, and it's already been consumed. I don't think now Indian market will sink because of tariffs. Let's see if at all Mr. Piyush Goyal, if he's able to make out some good deal, that will be even better for us. But as of now, it's looking that we are probably coming out of the woods. Jeffries is even giving a bigger target. They're giving a target of around 26,000 for Nifty, and they're extremely bullish. They're telling this is the best time to buy Indian equities. This is the best correction that Indian markets are giving you. The valuations are below 10-year average. We already seen the P levels of Nifty, which was touching 20. It has happened after 32 months. Probably it happened last time in July 22, which was a small bear market, which Indian market saw at that point of time because of high inflation and all those things, and Russia-Ukraine war. We are at the tip of it. We are probably started moving upwards. I don't know how much time it will take us to come out of the woods, but we already started to coming out. For the shorts, people who were short on the Indian markets, 22,500 was the stop loss. It has actually been hit today. 22,550, you can say maybe a more correctical mathematical stop loss, but I think that will also get hit very soon. So if you believe that short was going to make your money, probably the time is over. This is what I think. Now you should wait for the W-shaped recovery to happen and try to find a point where again you can short the Indian markets if you feel that this is a sell on rise kind of a market. According to me, it is not. It will be a gradual increase, so we'll find those dips and all. Whether how much money short will make and how much money bulls will make, time will say. But it's not a market now where you can earn a lot in short until unless we move to some levels which are fundamentally not correct, and we move there too fast. But if the gradual thing happens, like it has happened in last 2 days, yesterday also, whatever uptrend has happened on the markets, it all happened on the screen. Today also we opened gap up. We opened around 130, 140 points gap up, but again we went in red for some moment of time. We were around 90 points down on Nifty, and the entire upward movement has happened on the screen and slowly. This is the best way of increasing the markets in a bull run. That is why we all say that the markets go up on staircase, and when they fall like an elevator. So that staircase movement have started. Yes, it is too early to say that we have probably the worst is over, but according to me, the worst is over. I don't see the worst coming up. Today also, in the around 130 or so, the Dow future suddenly were down to 30 to 40 points down. Nasdaq was down by around 180, 190 points, but we were at a day high. That is telling that we have started to decouple from the US markets, and that is what I've been telling also, that if it is in US loss, will India gain? India will definitely gain out of it. Those are things we have been discussing for last 10-15 days. Now those all factors are coming up and showing their strengths. The dollar index coming down, bond yields coming to 4.25. Rupee getting stable at 87. It's not crossing below that. We told that, all the economists have told that 88 is the near term bottom for the rupee. We have not crossed below it, 88 or 88.5. That's what the economists have told. The Reserve Bank of India is doing extremely good job. I mean, not even the liquidity crunch has started to that. I think yesterday's report was that we were minus 22,000 on the liquidity front. But he's already announced that he will do a OMO of 1.87 lakh crores. And probably on 14th March and 18th March, they are putting a liquidity of around 1 lakh crore. So our Reserve Bank of India, the new governor, is extremely good. He's an IAS gold medalist, and those are the kind of people we want in these kind of important machineries, where that kind of oiling is required, fast decisions are required, which makes impact. You want those kind of decisions at the time when it's required. Our old governor probably missed that train in the last 1 year or so, but I think it's a good move. And a lot of liquidity crunches also come because of Mahakumbh. That's a report which came from SBI, and it has been told that a lot of money has been, or a lot of deposits have been broken during this time of Mahakumbh, because I think the expense have around been, or let's say the money movement have around been around 5 lakh crores or so in the Mahakumbh. And what SBI has told us, that a lot of that money will not come back to the banking system again. So that will also create a short-term liquidity crunch, and probably RBI has already seen that difficulty, and they've already taken a step, and they already announced that they'll be doing 1.87 lakh crores of OMO, which means open market operations, where they buy a lot of public sector bonds and other state bonds to infuse liquidity into the system. So that probably is a good news for us, that RBI is still active, and they are taking they are removing those bottlenecks very fast. That's extremely good step. Even Modi government is very swift in taking their calls. They've already sent Mr. Piyush Goyal to US before that deadline of 4th April. They're not 2nd April. They're not waiting for things to happen. They're active. They want to negotiate with them hard. Let's see how much hard they can negotiate with them. But it's an action-driven government, and that's what we want. The economy of India, which is such a large population with so much of difference of opinions and different roadblocks, you want that swift policy action to take place in whatever things you can. I think it's a great move, and it is giving confidence that probably we're on the right path. So another thing which happened now is that we started crossing now on those call writers which were there. So we had call writers on 20 to 200, 300, 400, 500. We have started giving close above that, which means now we want to punish the people who have short the market, and we want to reward the people who are now bullish on the markets. So we've seen a lot of put writing happen on 22,000 levels, 22 200, even 22 400. We've seen a lot of put writing happening. So these all levels will become a good support now. But we still want to wait for the market to cross those 22,800 levels, which is the bigger. We had those kind of drops uh, as a gap down from there, which we slipped around 500, 600 points. I think that gap has to be filled and eventually moving upwards. I don't think the economy of US will become so slow that we'll see a massive downfall in the IT companies of India. I think IT companies should do well from here. I don't know how much well, but at least the way correction have happened in the IT companies, I don't think the result will be so bad. And the US companies will not be so bad, in terms of the economy, will not be so bad that the expenditure on the segment of IT technology starts coming down. So that is also a good opportunity. And Nifty metal will always look good because of the dollar index going down. So the dollar index meltdown which happened yesterday, today if you see that 3% increase in the Nifty metal index. So metals will look good because the dollar index coming down. IT will look good because the US market economy is not synced down. So it is probably finding its equilibrium. The euphoria is coming out, but it is coming to the fundamentals. which means that IT spending will still remain strong, and we'll see a good move in the IT stocks as well. Pharma, I think US markets is actually silent. The US president is not talking about pharma a lot. He has told that I will put 10% tariffs or I'll put a reciprocal tariff, etc., all those things. But he's still very silent on pharma. And I don't think pharma, it will be very easy for Mr. Trump to put any tariffs on pharma, which means our pharma sector also do well from here. So pharma, if starts kicking in, uh, your IT starts stabilizing and starts moving upwards because it has seen a lot of correction now. Banks are looking extremely good because of the RBI action and the way the earnings have been. Reliance today has moved a good, and I think four brokerage reports were there today, and all four have given a target of around 1600 plus for Reliance, which means 30%, 35%, 40% increase from here on. And Reliance, I think, after a long time, probably after COVID, I think it has touched now, or it is now trading below uh, 200-week exponential moving average, if I'm not wrong. 100 week or 200 week exponential moving average. You can check on that, but this is what I remember. So a big stock like Reliance, if it is giving you such an opportunity, and all the brokerages are so bullish on Reliance, so which means that Reliance should fire, bank should fire, IT should fire, metal should fire, pharma should fire. The only pocket which looks nervous would be the auto industry because Trump has been telling a lot on the auto tariffs, high tariffs on all the auto companies, on the auto sectors. So probably that sector will still remain nervous. So I'm not very bullish on the auto sector. I'll you wait and see how it pans out. So apart from that, I think all the industries are looking better, and they're looking very benign to take the things forward. So the Indian market, which I really liked today, was the slow movement of the prices moving upwards. Very slowly, the screen-based movement was there. That's always a good sign of bullishness. It shows a lot of patience, a lot of buying has happened, a lot of shorts have been cancelled, or let's say, they have been covered. According to me, we will see some kind of action in F&O market today from FIs today also. It will be a buying in F&O market today also, but I think I'll not be surprised today that if we see some cash buying also from FIs today, I'll not be surprised at all because the screen is saying that. Apart from HDFC Bank, slightly, that also very slightly, we did not see any stock which was in red, which are the FI's favorite stocks. In fact, they were buying in almost all the stocks. So probably, according to me, you will see not only index buying now, or let's say stock futures. Anyways, they have been buying from last 2 3 days. But I will not be surprised if you see some cash-based buying also today. And we will become bullish on the Indian markets even more when you start seeing those delivery-based buyings from the Indian companies. Some 3,000 crore, 4,000 crores of HDFC Bank, Bajaj Twins, Reliance, Infosys, IT companies. That is what brings the confidence that they're doing delivery based buying, which means they're looking for long term bull market in India. See, FNO buying and selling happens very fast. You can cover those positions very fast, and those are meant for short term movement because anyways those are expiries. Some have weekly expiries, some have monthly expiries, some are at the max there are quarterly expiries. But if you are taking a delivery based buying, that means you're taking a long term view on the Indian markets, probably for the entire year. In between, you will have all those ups and downs. Not all series will go up, not all series will come down. That up and down will keep on happening because that's the nature of the markets. But overall, I think it's looking that the FIs should change their view, and that is the biggest mantra, or that's the biggest talking point. Have the sellers become the buyers? That is the question we need to answer. So keep a very close watch on what are the things changing, where exactly this rally could end. Whether we'll stop at 22,500 itself and the seller will become more aggressive and he will see the market going up, so he'll come and sell the markets, or he will wait for the things to go up drastically and then sell the markets. So we have to actually put all our analysis, all our information to actually find out where this W-shaped recovery or whatever recovery has to happen. Probably I'll not say a W-shaped recovery because now I don't see that the market will come back again to 22,000. So I'll not use that term of W-shaped recovery now. That probably we could have used the term at 23,000, 22,800 levels. But now I think the recovery can only be either V-shaped or U-shaped. I don't think now the recovery can be W-shaped. I don't think now that the markets will again come back to 22,000 levels. I really don't think so. I think that bottom has been made for the entire year. Now that bottom will only be broken when you see big turmoil in global markets or some big reasons come out of domestic markets. As of now, that is not looking, and probably will not revisit those levels once again. As soon as we start closing out 2200 800 levels, kind of a thing. So put all your energy and put all your analysis. I'll also be putting my efforts into it. Where exactly now we will see the short term rally to finish. So probably I'll be doing a study now. Let me see what are the figures from FIS. If I see some cash buying today, it will give me a lot of confidence. At least we are going to 23,200 in the near term. But those are all hypothetical things. We have to see the numbers of FIs. If I see some cash buying today, it will make me much more uh, confident on the things. Globally, we are rightly placed. US cracking is a good news. Now we only want Chinese markets to also crack. That will give us full leeway and full confidence that the Indian market will outshine from here. We want that drastic money which Hong Kong is attracting, that should stabilize or become constant. We don't want huge sum of money to go there, because that will always feel like that Hong Kong markets are very cheap and Indian markets still are extremely expensive. Anyways, our markets are not expensive now. We corrected a lot in that way. So overall, I would say the market is still looking good. I don't see now any. Probably, I'm not able to see any negative now. The only two negative which remains for us is that the FIS selling. We don't know from which point it will return, if at all it has to return. But if the reason for selling of India was only the earnings, GDP slowdown, and two markets looking very good of US and China, out of that, US has come out of the equation. China is still looking good and will continue to look good. It will continue to look good. I've already told you yesterday also, this deep seek theory is a structural story. It will not stop here. It has to go a long way. The other two things, whether the domestic slowdown, I think that also tough has been made, and now we are inching upwards. Earnings, we have to see how exactly we see now the Q4 earnings. That will give a lot of confidence to FIs to enter into the markets. Probably FIs will also see how the earnings come for Q4 and to take a longer positions or longer view in the markets. We'll also watch those things. Apart from these one or two things, nothing is looking negative as of now. Crude, it has come to 3-year lows. I'll give you a data. If the crude comes down by $10, it reduces our current account deficit by 0.4%, which means 14 to 14 billion dollars. It reduces our inflation of CPI by around 4.4%, and it reduces our wholesale price index WPI inflation number by 1.35%. Now crude is trading at around 3-year lows. Probably now the room is there for our government to cut the diesel and petrol prices. That will be the another impetus into our economy. It will reduce the inflation. It will give a lot of money into the hands of people. It will reduce the prices, and it will reduce prices of raw materials, everything, and all the input prices of the company, which will increase their profits. So I will really urge for, and this will remain now, because US is telling we'll pump a lot of oil. Now the OPEC members are saying we'll increase the production of oil, and I think in April itself they'll increase by 4.5 million dollars barrel per day, which is a huge oil. If at all the tariff war intensifies, US economy and China economy will slow down, which will again means that the oil consumption will slow down. So oil will remain on those levels. Probably it might even come down to $65. We'll not be surprised. Now it is below $70. So that's a huge shift. It's a 3 years low. That's again an input to our this. That's a we import oil a lot, and RBI, don't forget, they have assumed a yearly target of $85 billion average in their inflation calculations. Now it is trading below 70. And I don't think we'll be reaching to the $85 anytime soon. Whatever happens, we are seeing a geopolitical scenario cooling down very fast. Today, also, Trump has given some kind of a warning to the Hamas that release all the hostages, finish everything, or I'll destroy you. So they are not letting those Hamas people dictate. He's continuously behind Zelensky. Zelensky is under pressure now to reduce the or to end the war. So geopolitical situation cooling down, more production from OPEC, more production from US. I think the last data which has come from US reserves, 35 million barrels extra oil production has been done. He's continuously telling to add more rigs, add more pipelines. So I think crude will remain benign, and that's a good news for all our company, because that is a raw material. That's the input cost to us. It's not only the import bill of the government, but also our companies as such. That is the input cost. That actually, if that improves, the profits will increase. So India is today placed on a beautiful macros and micros. Our fiscal deficit 4.4%. I mean, GDP growing, inflation at around 4.3%, the lowest brand. Imagine a country growing at 10, 11 kind of GDP nominal growth, and inflation still around 4%. I mean, huge. You see what is happening in US. The country is growing at 2.3%. The inflation is 3.1%. Inflation is more than the GDP growth itself, which means they're actually into stagflation. India is still much better. We are growing at around 10, 11%. Inflation is only 4%. So 7%, even if we take only real GDP terms, let's say we're growing at around 6.5%, and inflation of around 4%, still 2.5% real GDP growth, real interest rate differential. So India's micros are extremely looking benign and fantastic. And all these things combined, it sets the carpet for a good move from here on. That's what I would say. It happens very fast story. That is the thing to we have to watch. But the punchline which I've told, have the seller become buyers. I think the day is very near. If it is not happening today, it will start happening very soon. But the seller have to become buyer now. This is the only thing left. If they want to remain invested in the equity markets, this is the market. This is the market. You can't invest in US now. The bond yields have cooled down. They're coming to 4.2% now. So you don't want even those kind of returns from US markets. Dollar index coming down to 104, which is allowing you or giving you a roadway or a leeway now to enter the emerging markets. I don't think anybody can lose this opportunity. A lot of correction has already been done. They already pulled out a lot of money. Now is not the time to pull out the money. This is the time to invest. I think the seller will become buyer very soon, and that is the time we'll see a huge spurt in the markets of Indian equities. And that's what I'm saying. People who are saying that second half will be good, rethink your strategy. People who are saying that it's a sell on rise market, rethink your strategy. People are saying that we are waiting for the levels of 21,000 on the Nifty, rethink your strategy. When you think your strategy, don't think only on the charts, don't think only on the price actions. Think logically and think on the broad parameters on which the stock markets are built on. The important parameters which actually lead to earnings, which actually leads to the market cap formation. If you think about those logical things, then you can easily remove the noise of these daily or weekly things. We are not here to earn something on daily or weekly basis. We are investors. We want to make money out of Indian markets by remaining a positional buyer or a seller. We don't want to play those short term themes. And as of now, micros and macros are looking extremely good for a good rally from here on. So let's see how it happens and how it goes. That was analysis for today. Thank you so much for watching. Thanks so much.